Thursday, June 28th, 2018, Monaco 64, home of alternative economics and contrarian views. I want to talk about GDP, how it's calculated, and why it doesn't really matter if we go into a recession or not, if the yield curve inverts. Because we've been in a recession for the last 10 years, and if not, the economy has been stagnant some of those years. And you will understand why, especially if you believe that the real economy is the private sector, because government and the public sector, they don't create wealth. All they do is extract wealth from the private sector, from wealth creators. So government spending actually takes out of wealth creation. But GDP, for some reason, says that government spending is part of wealth creation, which makes no sense whatsoever. So I want to just tell people not to worry about inverted yield curve. Oh, we're going to have a recession. No, because we already are in a recession. And it's just a waste of time. And I think people should focus right now on what's happening to commodities, especially oil. Oil is going up in every currency, and it's going up very sharply. I have some figures here, which I spoke of yesterday in the live stream, but I'll speak about it in the video. And why is oil so important? Well, it's the lifeblood of the economy. You need fuel to do everything, to power automobiles, to power airplanes, to power tankers, ships, power plants, everything needs oil. I know some gas is used, and by gas I don't mean gasoline, which Americans call gas. I mean, you know, natural gas. But yeah, and the way it's going up now, it's going to like, it doesn't create inflation, by the way. Inflation is a monetary phenomenon. The prices of oil going up now are, I think, a sign that powers that be are losing control of all the manipulation, trying to keep everything like honky-dory, keep financial assets elevated, keep, you know, interest rates artificially low. They're not gonna be able to succeed. It's like the little Dutch boy trying to keep the dike from flooding and putting fingers in little holes. I think the oil price is going to be what undoes the powers that be and the central bankers and their manipulation. They're not going to be able to keep the price down. And what does that do? Well, in a consumer-based economy that we have, based on credit, borrowing, I mean, the US economy is almost 70% just credit and borrowing. That's gonna like hurt consumers, because they're gonna have less disposable income to consume. They're gonna have less disposable income to pay existing debt, and it's all gonna like slow down. And we know that in a credit-based fiat money economy, consumers need to keep borrowing to keep things going. We know that the margins for big corporations, for all kinds of companies, are really thin, and if they start, their cash flow goes down, they're in trouble and they fold. So that's what we need to focus on, not the yield curve. And I'll show you some charts of the yield curve if you want to look at, but I don't think it really matters. And before I go into how we calculate GDP, we'll quickly look at the markets right now. It's 8:30 a.m. London. Gold down $3. I know it's frustrating. I'm not frustrated. Actually, in the last couple of days, we've gone up in pounds, so I'm not concerned. You might say, well, why don't you hold dollars, you know, instead of gold? Why would I want to hold dollars in the UK? It would have to be with probably Citibank, an American bank here. Do I really want money with these crooks? No. So I'd rather have gold. It's the anti-fiat. Why would I want to hold dollars? Anyway, gold is $1249.50, down $280. Range has been $1248.40 and $1254. We've gone down below $1250 just in the last 15 minutes. You know, the Bank of England, the BIS, they're constantly manipulating the foreign exchange markets. And yes, gold is traded as a currency. It's a foreign, it's a currency. It's traded together with all the other fiat currencies, even though it's not a fiat currency. Silver at 1608, up 3.5 cents. Range has been 1601 to 1615. The Dow up 78 right now at 24,200. So it's up 1/3%. I still think the Dow doesn't look very good. We'll look at the charts though. S&P is up 10, up 0.4% at 2710. 2010. The NASDAQ is just above 7,000, up 35 or 0.5%. The pound is 130.85, so we've broken below 131. We're down 0.2%. I think the pound's going a lot lower against everything, especially, yeah, everything that is not a pound. Why? Because the US is so much debt. Sorry, the UK has so much debt. So does the US, of course. But and there's no way out of the debt. So they need to keep debasing the currency to make that debt worth less. And that's going to be more hardship for the general public. Because if the pound that you work for doesn't buy as much, you're not going to be able to buy as much, right? Euro is unchanged, 115.55, and the dollar is up 0.1 versus the yen at 110.38. Crude oil, the WY is at 72 right now. It's down 22 from yesterday's close, but it's still very near the recent high in May, just above 73. So we need to keep an eye. If you see WTI with a 74 handle, that means that it's breaking out. So right now it's at 72. It went up like 2% or plus more yesterday. Brent crude is 77.31. That's also doing quite well. So let's quickly look at the yield curve. So I've got this chart here from investing.com. So the blue line in the shaded area, that was the yield curve a year ago. So you can see that the 2-year was around 137, and at the time the 10-year was at 227. So it was about 90 basis points difference. Now, a year later, which is the line above, the last line above here, right now the 2-year is at 250. And the 10-year is at 283. So that difference is only 33. So once, well, the curve hasn't inverted yet, but it's, how can I say, it's flattened. So it's a lot flatter than a year ago. It will invert if the 2-year or the 5-year rate goes higher than the 10-year, for example. That's an inverted yield curve. And a lot of people have been saying, oh yeah, this is a sign that we're going to go into a recession. And as I said, I don't care because I think we're already in a recession. And I'll tell you why. So I spoke about GDP, right? This is from Wikipedia. Components of GDP by expenditure. And it says GDP, which is Y, is the sum of consumption, investment, government spending, G, and net exports, right? Exports minus imports. So if you run a trade surplus, that will add to GDP, which makes sense, right? But government spending, it says it's the sum of government expenditures on final goods and services. And the reason why I think it's really silly to add government spending to GDP is because government doesn't create any product, but the only way they are funded is through taxation, right? So the government takes from the private sector. So the fact that they are, you know, the Keynesians, because this is a purely Keynesian, you know, rubbish, these statistics, the fact that they add GDP, government spending to GDP doesn't make sense. Because you'd think that it's the productive private sector that creates wealth. and government only takes out. So why do I think our we are in recession? Well, if you look back to 2008, when I think the budget deficit in the UK after the crisis was over 10%, something like almost 15%. And it's come down right now. I think the budget deficit is around 2%, but the latest GDP numbers was 1%. So if government is spending an extra 2% of the GDP, and it's not balanced, it doesn't have a balanced budget, that means that if the government were to have a balanced budget, which they should, like we all have to have, don't we? GDP would actually be -1, because if you take out that deficit of 2%, it becomes, -1. 1 minus 2 becomes -1. The same for the US. The other day, one of Trump's economic advisors, Navarro, he said, oh, we're going to have 4% GDP very soon. He could be right. The thing is, he doesn't tell you is that the US budget deficit is going towards 5, 6, 10%. So if you have 4% GDP, but the government is spending 5% more of the economy than it should, that means the GDP is actually -1. So I think the only country in the last 10 years that actually has had some real growth is probably like Germany, because they have like a surplus or a balanced budget and their GDP has actually been growing. So, but the US and the UK, if you look at the deficits in the last 10 years, you might have had some periods where there's been a bit of growth, but if anything, it's been negative. And all you have to do is look at the GDP for for the different years and what the budget deficit was. So if, let's say, GDP in the US was 2.5% for one of the years, but the budget deficit was 3%, so real private sector GDP was -0.5%. The other thing that is that I think completely defeats this argument of whether we're in recession is that when you calculate GDP, it has to be on a real basis. And what does that mean? Well, they deduct the inflation that's been added into the system. How they deduct that? Well, they use their government statistics, their GDP deflator, which is always lower than the CPI. And we know the CPI is doctored. So if we accounted for real inflation in the GDP, and if we didn't add budget deficits to the GDP is like really been going down. And that's why the general public feels it. And that's why only the top 1% and the very wealthy that can protect themselves from this are gaining. And that's why it feels like, people can't afford housing. They're hard up. So yeah, let's forget about the recession. We've been in recession already. If they do declare we are in recession officially, that means we're in a Great Depression. All right. So yeah, and oil, I'll go quickly through oil. And I just want to show you some charts so that people can see what's happening. And I think there's a flight from fiat currency into real goods, and oil is starting to show that. And the reason why the dollar is doing better against the other currencies right now, because the dollar is at the center of the fiat currency system. So it's normal that the peripheral currencies start going first, but the dollar will go too, because the dollar is also down against oil. So first of all, I'll show you the British pound against oil, right? So there you go, 20-year chart. Look how we've been moving the last 2 years, and it's really accelerating now. So that's in sterling. Aussie dollar, oil. Here we go. Same kind of scenario. Canadian dollar, same thing. Brazilian real is even worse, because that's more peripheral. It's the emerging market. We're making new 20-year highs. That's why things are not going too well in Brazil, even though Brazil does have some oil. Same thing for Iran. I haven't put the Iranian Rial chart, but you can bet it's even worse. Euro, same thing. Euro starting to fall quite a bit against oil. And even US dollar, even though it hasn't been falling as much. And we're still way below that 2008 high. So yeah, there you go. I think oil is starting to, it's like the canary in the coal mine. It's telling us that the central bankers' game is coming to an end. They can't paper things over forever. If they could, the world, we would never have poverty in the world, and we all know that we do. Look at Zimbabwe, look at Weimar Germany, look at the UK. You know, the pound 100 years ago was almost $5. Now it's almost $1. I know it's been slower, but fiat money eventually goes to zero. And that's where I think we are right now. How long it will take, I don't know. It could be really quickly. That would be hyperinflationary, or it could be a slow grind. We'll have to wait and see. But yeah, forget about the yield curve. Forget about recessions, because we're already in one. And keep an eye on oil. That's what's really going to trigger the Great Depression. So if you enjoyed this video, please like, share it far and wide. Subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. And I'll talk to you later. Take care. Bye.